Wall Street. Just a few blocks in Lower Manhattan, but its name echoes worldwide. More than a place, it's the heart of the American and global financial system. What happens here ripples across continents, shaping economies everywhere. Wall Street's story is one of ambition, innovation, and sometimes spectacular failure. It's a drama that touches us all, whether we own stocks or not. From a humble wooden wall to the world's financial capital, its history is full of dramatic ups and downs. To understand Wall Street today, we need to look back at its origins. Let's walk through time, meet the people who shaped it, and witness the moments that defined its character. This is the story of how a small lane in New York became the financial capital of the world. Before the traders arrived, before the bustling markets and the towering skyscrapers, Manhattan was a Dutch settlement, a small but growing colony called New Amsterdam. It was a place of new beginnings, a hub of activity in the New World, brimming with potential and promise. In the 1650s, the colony was under the firm hand of Governor Peter Stuyvesant, a figure known for his strong will and sometimes controversial decisions. To protect the burgeoning colony from external threats, Governor Stuyvesant ordered the construction of a simple wooden wall. It wasn't grand, but it served its purpose. The wall, made of earth and timber, wasn't built to last for centuries. Time and the elements took their toll. But the path that ran beside it, initially intended for defense, gradually transformed into a gathering place, a spot where people met to exchange goods and ideas, a place for business. The Dutch settlers began to call it de Wall Straat, Wall Street, a name that reflected its origin and its function. Even after the English took control of the colony, renaming it New York in honor of the Duke of York, the street's Dutch name, Wall Street, proved remarkably resilient and stuck, a testament to the area's history. Early trading here was basic, reflecting the needs and resources of the time, such as fur pelts from the wilderness, tobacco leaves grown in the fields, sacks of grain harvested from the land, the raw materials of a young colony. Over time, Wall Street gradually became the economic hub, the beating heart of commerce, of a growing port town, a place where goods from around the world flowed in and out. As America formed and fought for its independence, the new government issued bonds to pay for the revolution, a crucial step in financing the war effort, and shares in new banks and insurance companies, vital for the growth of the economy, began trading here, laying the foundation for a future financial powerhouse. These early financial securities were traded informally, often without the regulations and structures we know today, often outdoors under the open sky or in the bustling atmosphere of coffeehouses where deals were struck over cups of coffee and lively conversation. The seeds of modern finance, the roots of a global economic force, were planted right where the old Dutch wall once stood, a symbolic connection between the past and the future. Wall Street's legacy as a center for deals, commerce, and ultimately, global finance, was firmly set in motion. By the late 1700s, New York City was rapidly evolving into a bustling hub of commerce and trade. The streets teemed with merchants, sailors, and entrepreneurs, all eager to capitalize on the burgeoning opportunities. New York's financial trading, however, was chaotic and risky. Transactions often took place in the open air, amidst the noise and confusion of the city streets. There was little regulation or oversight, making it a breeding ground for speculation and potential fraud. Anyone could claim to be a broker, and there were no rules governing their conduct. This lack of structure created an environment of uncertainty and mistrust, hindering the growth of a stable financial market. The need for a more organized system was becoming increasingly apparent. In 1792, a pivotal year in American financial history, 24 brokers, recognizing the urgent need for reform, met under a buttonwood tree on Wall Street. This simple gathering would prove to be a watershed moment, laying the foundation for one of the world's most powerful financial institutions. Their purpose was clear: to bring order to the chaos that defined New York's financial landscape. They sought to establish a framework of rules and standards that would foster trust, transparency, and stability in the market. The result of their meeting was the Buttonwood Agreement, a simple pact yet profoundly impactful, to only trade with each other and set standard commissions. This agreement was a commitment to fair dealing and a rejection of the rampant speculation that had plagued the market. This exclusive club, born from a shared desire for stability and integrity, was the foundation of the New York Stock Exchange. It represented a shift from individualistic, unregulated trading to a more collaborative and structured approach. The agreement created trust and stability, fostering a sense of confidence among investors and traders alike. This newfound reliability was essential for attracting capital and promoting long-term growth, transforming informal street trading, characterized by its unpredictability and lack of oversight, into an organized institution with clear rules and procedures. The brokers, now bound by their agreement, soon met in coffee houses to conduct their business. But the Buttonwood Agreement, with its promise of fair dealing and standardized practices, was the critical first step towards establishing a modern financial market. It gave people confidence to invest, knowing that their transactions would be conducted according to established rules and that they would be treated fairly, and set the stage for Wall Street's rise as a global financial powerhouse. The agreement provided the foundation upon which a robust and dynamic market could be built. The NYSE became a centralized group with shared rules, fostering a sense of community and collaboration among its members. This collective approach was essential for promoting stability and growth. This structure, built on the principles of trust and transparency, helped Wall Street become America's dominant financial center, attracting capital and talent from around the world. From a handshake under a tree, a seemingly simple act of collaboration, a global powerhouse was born, transforming the landscape of finance and shaping the course of American economic history. The Buttonwood Agreement marked the birth of modern finance in America, ushering in an era of unprecedented growth and innovation. Wall Street's transformation had begun, and the world of finance would never be the same. The 1800s brought explosive growth, a period of unprecedented transformation, to America and Wall Street. The burgeoning financial district became the epicenter of this economic revolution. The Industrial Revolution and westward expansion, two powerful forces, fueled demand for capital. Entrepreneurs and visionaries sought funds to build factories, expand railways, and develop new technologies. Railroads, the era's giants, those iron horses that crisscrossed the nation, needed massive funding, dwarfing any previous financial undertaking. The scale of these projects was truly unprecedented, so they sold stocks and bonds, offering shares of their companies to the public. Through the exchange, the New York Stock Exchange became the primary marketplace for these securities. Wall Street became the engine, the beating heart, of America's industrial boom. It was the place where dreams were financed and fortunes were made. Ordinary people began investing, seeing an opportunity to share in the nation's prosperity. Not just the wealthy elite. The democratization of finance was underway. The telegraph revolutionized trading, connecting distant markets and speeding up communication, sending stock prices across the country in minutes. Information traveled at the speed of light, transforming the pace of trading. The NYSE became undeniably the national hub for finance. All roads, financially speaking, led to Wall Street. In 1867, the stock ticker arrived, a groundbreaking invention that would forever change the way stocks were traded, printing real-time prices on ticker tape. This continuous stream of information provided instant updates to investors. Brokers no longer relied on messengers. The days of runners shouting prices were numbered. Information flowed instantly. The market became more dynamic and responsive. The market became more transparent and efficient, reducing information asymmetry. The iconic image of brokers glued to the ticker tape watching ticker tape was born. It became a symbol of Wall Street itself. Technology and ambition, a potent combination, turned Wall Street into a symbol of American progress. It represented the nation's drive and ingenuity. The pace of finance, once measured in days, would never slow down again. The momentum was unstoppable, propelling Wall Street into the modern era. The Roaring Twenties brought prosperity and wild optimism to Wall Street. New technologies and booming factories fueled a historic stock market climb. Ordinary people invested, often buying stocks on margin, borrowing most of the money. As long as prices rose, fortunes were made overnight. But this created a fragile bubble, with prices far above real value. In October 1929, the bubble burst. First on Black Thursday, then Black Tuesday. Billions vanished in days. Investors were wiped out. The crash triggered the Great Depression, the worst economic crisis in modern history. As savings disappeared, businesses failed, and unemployment soared. The crash exposed deep flaws in the unregulated financial system. Wall Street's dream of easy money had become a nightmare. The consequences rippled far beyond New York. The need for reform was undeniable. The Great Depression forced America to rethink Wall Street. President Franklin D. Roosevelt's New Deal brought sweeping reforms. The Glass-Steagall Act separated commercial and investment banking, protecting everyday savings from risky speculation. The Securities and Exchange Commission, SEC, was created in 1934 to police Wall Street. The SEC enforced transparency, requiring companies to provide honest financial information. Insider trading and market manipulation were outlawed. Buying stocks on margin was strictly limited. These reforms restored public trust and brought stability to the markets. Wall Street entered a new era of accountability. The groundwork was laid for decades of growth after World War II. Regulation made investing safer for everyone. The market became a place people could trust again. Wall Street's wild days were over, at least for a while. After World War II, America boomed and so did Wall Street. The market's growth was steady, built on real economic strength. New Deal regulations gave people confidence to invest for the long term. The middle class joined in, thanks to rising incomes and mutual funds. Investing became a way to save for retirement, college, and the future. Wall Street marketed itself to Main Street, democratizing finance. The stock market became a symbol of the American dream, upward mobility for all. Wall Street's influence reached every corner of American life. Stability shattered on Black Monday, 1987, when the Dow plunged 23% in a day. Computerized trading fueled the crash, revealing new risks in the digital era. The 1990s brought the dot-com bubble. Tech stocks soared, then crashed, wiping out trillions. In 2008, the housing market collapse triggered a global financial crisis. Risky mortgage-backed securities and defaults nearly toppled the system. Through it all, technology kept transforming Wall Street. Trading floors gave way to computer servers. Online trading put the market in everyone's pocket. The digital age made investing faster and more accessible, but also more complex and risky. Wall Street was now a high-speed, high-stakes game. Today, Wall Street is the nerve center of a global financial system. Decisions made here affect economies and lives worldwide. Billions flow through Wall Street daily, seeking opportunity and stability. Investing is evolving. ESG, environmental social governance. Investing pushes companies to be responsible, not just profitable. Digital currencies and fintech startups are disrupting old models. Commission-free trading apps have brought a new generation of investors. Wall Street must adapt to powerful new trends and challenges. Its story is one of constant change, ambition, innovation, and risk. Understanding Wall Street's past helps us navigate its future. The street named for a wall will keep shaping our world in ways we can only imagine.